back to the trading desk. Dave, today we're going to do something a little bit different. We're going to talk a little bit about, we had somebody, a potential client, call and ask us about a scenario they were in. And, you know, again, we get a lot of these calls after the fact. So let's kind of go to the screen here and look a little bit of what they were talking about. But it's a typical situation that you see after a big downside move in the market. You know, a lot of people now are asking, what do I do?
Well, not only, you know, this is we'll explain this in just a moment, but I mean, this is indicative of any market period. Even after big downdrafts, people are always whining about that they lost a lot of money. But even during good periods, people never make as much money as they could because they get inundated with fees and bad advice. But before we get into that, let's just take a look. This is an actual account statement, or at least a summary of an account statement that was sent to me by a potential client of mine. He watches the show all the time. And he sent me this, and I was stunned. I mean, he bought these investments, I believe, back in 07, maybe early 07, late 07. He wasn't specific, but the bottom line is he had 4 funds. These are all closed-end mutual funds.
So it looks like you started with about $100,000.
Correct.
Split between 4 different ideas here.
Right. And here we have the percentage losses as of last Thursday. And it's just simply stunning.
And this is after the 67% move we just had off the bottom.
Even off the bottom. So it was even worse when we're talking back in March of 09. He was even underwater even more. And the thing that really drives me nuts about this, and I know it drives you nuts too, he actually paid a commission to get this lousy advice.
Right.
It's just simply stunning. Let's go look at the charts of some of the individual stocks that were in here.
And I'm going to point this out because I think you've highlighted that
this
these
is
charts
roughly where his entry point was.
Right, so this is the entry point. And then what I also find interesting about these entry points is this is how you can use charts. I mean, imagine we don't have the right side of this chart. But when you sit down with your investment person that you may have or thinking about, you need to address right up front, where is my risk? Where are we getting out of this position? Not
only where is your risk, but why you can't see it on this chart. But this had already made a massive move to the upside. Right. So you have to be wondering yourself, where's the risk relative to the reward?
Right.
But you're right, where's the risk? You know, am I going to cut the position here?
Right.
Here? Apparently this advisor never questioned where they're going to cut the, I mean, this is insane.
Yeah, you could have lost your money here, you could have lost your money here, you could have lost your money where we are today. And then that's the whole point, is that it doesn't seem like there was an exit strategy.
There was no exit. It goes back to what we've always ridiculed on the show, buy and hold. There is no such thing as buy and hold. Buy and hold over the last 10 years has resulted in a negative return in your investment portfolio.
Well, and even somebody like Warren Buffett, and let's go value. I mean, let's go value. These guys that are deep value buyers, they're looking for things that are cheap relative to the market.
Correct.
Okay, so that's really, I think, what charts help people, along with the fundamental homework that you do, is that they set up, like you said, hey, we've run 500% in the last 2 years. Is now a good time to be initiating a position if we missed that 500%?
Exactly.
And if so, we better have a reason why. But if we do get into it, where is our exit? You know, where is our risk on that? And that could be, you know, 10%, it could be 20%, it could be a dollar amount. But I think people need to come, you know, as you suggested, be more proactive themselves and have some of this in their mind before they sit down. Where are we going to, where is our parachute, if you will?
Yeah, because you have to admit you're going to be wrong at times.
Absolutely.
And you just have to say, okay, I was wrong on this idea. It didn't play out the way I want. You can always get back in.
And if you do that, I think the profits take care of themselves, and then you can adjust that as the trade goes your way or the investment goes your way.
Exactly. Let's go through a couple more charts. I mean, they're almost identical.
They are. I mean,
in fact, here, this is an oxymoronic chart. It's called the Value Fund.
JP Morgan, so you've got a big name, JP Morgan Value Fund. Again, this would be a Warren Buffett type play, I guess is how they would probably be marketing or selling this. Sure. But it's very clear that the value had been taken very high into the market.
Exactly. So, you know, again, where was the advisor at this point in time? And I mean, you could also put some pressure on the client saying, hey, you know, why are you letting this happen? But I think there's that perception in there that, well, my advisor knows best. Well, we're going to prove in the next segment that advisors know very little about what happens in the market. Right. So one last chart. Again, they're almost mirror images of one another.
This is interesting because we talk about diversity a lot, and this is actually a multi-strategy income growth fund. So what that means to me, if I, you know, as someone who's kind of in the business, is this is a bond fund that's got all types of different bets.
Right.
Multi-strategy, that's what that means. Diversity. Well, you can see diversity in this case didn't do you a world of good in a downturn.
Well, you know, to wrap up this segment with going back to Warren Buffett, his phrase, and I'm paraphrasing here, is diversity is for the ignorant.
Right. You
don't need to diversify if you know what you're doing. You pick investments that make sense. When you try to diversify yourself, you diversify yourself to mediocrity. So, at any rate, we're going to come back in just a few moments after we pay a few bills. We have a few more points we want to share with you on how you can improve your investment portfolio and become your own advisor and not have to pay the exorbitant fees that these so-called investment advisors ask of you. You're watching The Trading Desk on COTV, Channel 11.